Happy Monday, everybody. I hope you had a very productive weekend. Today is Monday, November 17th, 2025, and this is your Monday market update. Now, last week was a microcosm of the current market: extreme optimism, heavy selling, and an underlying reliance on AI momentum. The core dynamic was the end of the government shutdown, which quickly shifted focus to the data vacuum and the deeply divided Federal Reserve. Let's review the week that was, and then we'll talk about what is coming up this week. We kicked off the week on Monday, of course, with a strong surge in risk on assets as news broke that lawmakers were making real progress to end that record-long government shutdown. This initial optimism sent all three major indices sharply higher. This excitement was amplified by a Fed governor actually calling for a 50 basis point rate cut in December, fueling hopes that the Fed was fully committed to easing policy. The Dow gained 0.75%, the S&P rose 1.5%, and the Nasdaq was up 2.25%. Optimism faded quickly by Tuesday, and the AI narrative hit some turbulence. Despite the Dow climbing to record close, the broader market showed some strain. Tech shares experienced early selling pressure after SoftBank sold its entire stake in NVIDIA, citing intentions to explore other AI investments. We know that they're all over the place in that. Compounding the worry, a weekly jobs report from ADP, which we're tracking closely in the absence of any of the government data, that showed a concerning loss of over 11,000 jobs per week across the prior 4 weeks. Final figures were mixed. The Dow gained 1.25%, S&P rose 0.25%, but the Nasdaq was down 0.25%. On Wednesday, the market finished largely flat as money flowed out of the high-flying tech names and rotated into small caps and quality stocks. We saw a massive split in the commodity space. Oil prices plunged after a bearish OPEC report confirmed that global oil stockpiles are now rising. Conversely, gold futures surged up over 2%, reaching multi-week highs as investors sought some safe haven hedge against the deep uncertainty looming over the delayed economic data. The Dow was up 0.75%, while the S&P was virtually flat, and the Nasdaq was down about 0.25%. Thursday delivered a heavy sell the news reaction after the government shutdown was officially ended by the president's signature. Traders immediately turned fearful that the coming flood of delayed reports would paint a negative picture of the economy, leading to a broad-based rout. Rate cut certainty evaporated with a failed 30-year Treasury auction, pushing bond yields higher, causing the market to price the chances of a December rate cut to a coin flip, just about 50%. The Dow was down 1.75%, S&P was also down about 1.75%, and the Nasdaq was down 2.25%. Closed the week on Friday with a volatile session that ultimately ended mixed. The recovery was driven almost entirely by the mega cap AI names, with NVIDIA bouncing back sharply as analysts pointed to the underlying strength and solid fundamentals of the AI growth story. Sounds familiar? This is a clear sign that while volatility is high, AI enthusiasm remains the single biggest pillar supporting this market. The Dow finished down slightly, but the tech-heavy Nasdaq was remarkably resilient, clawing back sharp early losses to finish up less than 0.25%. The Dow fell 0.75%. S&P was also flat. And at one point in the trading day, on Friday, the Dow was down 1.25%, S&P was down 1.5%, the Nasdaq was down close to 2%. That was before, of course, that turnaround came back. For the week, the Dow ended up about 1/3%, S&P was up 0.1%, and the Nasdaq was down about 0.5%. The end of the government shutdown marks a major turning point as the Federal Reserve's data vacuum is finally over. The entire market is now focused on the immediate future, the data flood and the divided Fed. For weeks, the Fed has been flying blind, using patchy data to gauge the economy's health. No one is yet 100% sure that the data is even there to report. But as far as we can tell, the fog is about to lift. The Treasury should release the long-delayed Census and Bureau of Labor Statistics data. It could turn out to be the most important week for eco data in months. Today, we start with the backlog of August construction spending. An Empire Data manufacturing survey actually came out good this morning. Tomorrow, Tuesday, we should get the August factory orders, the NAHB housing market index, and we should also get the ADP employment data. Wednesday, we should get FOMC meeting minutes from the October meeting. Now, this was the newsmaking meeting. Lowered rates, and they had a split vote. And this was also the meeting preceding the press conference that Powell pushed back on the December cut. I don't think you'll get a lot of surprises, but these minutes will be watched. Thursday, due to the delay, we should get the biggest report of the week. That's the long-delayed September employment report. That's supposed to be released on Thursday, including non-farm payrolls, unemployment rate, and average hourly earnings, all big important things that we're going to be looking for. This report will provide the first official look at the labor market's true health in months and will heavily likely influence the December Fed's decision just 23 days until that next Fed meeting. We'll also get jobless claims and Philly Fed manufacturing index. Friday will bring the University of Michigan inflation expectations and consumer sentiment, and this will be important with the shopping season upon us. We'll also get both manufacturing and service PMIs preliminary for November. Amidst the data dump, we have a packed schedule of 19 different Fed heads speaking events this week. Their public comments will be the main source of guidance on the central bank's next move before they go into blackout period, which is going to be soon, highlighting the deep division inside the FOMC regarding future policy. Let's list them for the Fed head bingo players. It would actually be easier to say who's not speaking, but here goes. These are the guys who are speaking: Williams, Jefferson, Kashkari, Waller, Barr, Barkin, Logan, Mirren, Hammock, Cook, Goolsby, and Paulson. Now, don't worry, there are some doubles in there to make that all those speaking engagements. And before we close, of course, there is that one big elephant in the room. Yes, nearly all of the S&P 500 companies have released earnings. The remainder is all about who they are now, not how many are left. Of course, all eyes will be on NVIDIA on Wednesday, but don't forget Walmart, Target, Home Depot, Lowe's, TJX, Ross stores. But NVIDIA, of course, is going to pull all the oxygen out of the room, so watch for that. Like my mother always says, it's not what you say, it's how you say it. And in this case, it's how they say it and how the market hears it. In summary, this week we'll test the market on all three fronts: whether economic growth has truly softened, as some has feared, whether the Federal Reserve can find consensus, and if the AI trade is still alive and well. Per NVIDIA, add in the consumer as we approach Black Friday and the Christmas shopping season. We will be tracking all of these critical releases and the market's reaction closely to keep you informed and what it means for your portfolio. Please stay in touch, keep your focus on the long game and the goals. Have a great week and keep planning.